This is Alan Farley from FX Empire. Twitter is down about 12% at the open of Monday's U.S. session after Friday's announcement that it had suspended Donald Trump's account permanently. Now, the issue probably isn't as much a political one as it is a revenue one because he had so many followers that he contributed to ad revenue, and now many of his followers are also going to be leaving. So I think the concern among investors isn't the political action of removing his account, it's more what's going to happen to profits. Taking a look, you can see this is the IPO opening print line right in the mid-40s. Twitter tested this line for a couple of years. It attempted to break out in the second half of 2020, initially failed, and then came back up to about a 6-year high up here in the 50s. Now it's been pulling back for about a month, and then it gapped through the 50-day moving average right onto breakout support right here around 45. Now this is a classic rock and a hard place setup where you've got very, very strong selling pressure plus very, very strong support. So I think we get a lot of volatility right in this area here. We may even get a few whipsaws on either side, perhaps down to this 200-day moving average. At the end of the day, I think the stock's going to hold the breakout somewhere, settle somewhere in the mid-40s. But I mean, it's radioactive right now. I wouldn't touch it, especially if there's any more violence in the United States. It could really affect this stock, perhaps dropping into the 30s. So I think for the time being, you need to be an observer rather than a trader, unless you're right in there with 15 or 5-minute charts and you're trying to do some scalping. For the rest of us, I think you have to be respectful of this downward pressure on the stock and also this upward push and support, and to say it's not for me right now. Let's wait and see what happens.